essentially is a machine learning algorithm that assesses market risk at the time, and then it determines how much it should modify your buy or your sell coefficient. I think we just ticked over 1 million swaps. We have some really unique insights into this, actually.
Welcome, Fabrizio.
Dankeschön.
You're working on a project called Calculated Finance, right?
Correct.
And what are you doing there?
First off, I think I need to compliment you on this office and this fantastic design. So Calculated Finance, I'm one of the founders. Essentially, it was born off the back of the Terra collapse. So we were quite involved back in Terra days. I doubt I need to go into detail of what happened there. But a lot of the kind of core learnings that we took away from that, apart from a monetary perspective, is we had a lot of people making rash decisions really based on FOMO or hype or shilling. And they didn't necessarily control and take more of a calculated approach to being involved in that from a monetary perspective, but from a community perspective as well. So off the back of that collapse, we stepped away and we said, can we build a suite of tools that help people make smarter swaps in a more calculated way? So kind of planning up front what you want to achieve, and hence the name Calculated Finance was born. It does go short by CALC, C-A-L-C, but Calculated Finance is the name.
And what can people do with CALC?
On a more practical perspective, the first product off the bat was dollar cost averaging. Again, is it a good time to buy now? Is it a good time to sell now? It's quite a difficult question to answer. Different people have different risk tolerances. So a way to counter making all your chips or taking all your chips on one bet is to spread out your bets over time to capture that average. Mm-hmm. And you see, I think at the core of it, if everyone's talking about something on Twitter and it's just pumped, crazy amounts, you suffer from recency bias or FOMO or herd mentality. So again, the first product off the bat, dollar cost averaging, helps you essentially on-chain in a permissionless way, in a non-custodial way, access funds over time on a decentralized exchange that we support. So Fin's Kujira was the first one, and then Osmosis we really recently integrated into with many more on the way, which we can talk about after. So we introduced dollar cost averaging. We don't think about the problem as just the swaps. We talk about what happens pre, what happens post, because if you look at again, end-to-end buyer journey from a service design perspective, we know it's not the single action you want to take. Mm-hmm. So we looked at baking things into, again, nice interface to set it up. Come in, set your amount.
How does that work practically? So I can put a stablecoin into a CALC vault, right? And then every day or every week, like in a predefined period, it buys the asset, right?
Correct. Yeah. So, and vice versa. Mm-hmm. So you can put in a volatile asset that you want to sell and you can take profit on it over time as well. So you've got control. You can do every minute, every 5 minutes, every hour, every half an hour, every whatever it might be. And then, that's executed on chain. There is some fuzziness. Essentially, there's off-chain bots that are running, hitting the smart contract, trying to trigger it. When the smart contract thinks like, okay, this is actually ready to be triggered, we'll say, okay, and we'll move forward. Mm-hmm. So something from like a user experience perspective, Calculated Finance covers all gas costs, for example. It'd be for us outrageous to require people to come and confirm every swap to pay for the gas. So we kind of tie up everything in a nice experience and try to abstract away a lot of this. For power users, you can do pretty crazy things. You can set price floors, price ceilings. You can determine to skip. You can choose to start when a certain price or a day or a time is hit. And you've got very much control. You can run every minute, every year, every whatever it might be. And then the post-swap interactions, we can do things like automatically deposit into a Mars pool to earn yield, maybe automatically stake and auto-compound with someone like YieldMoss, and we use AuthorZ to do that. So again, back to the custody, goes to your wallet, your control, you can go look, you can see where it's staked, you can choose your validator, etc. So it's around dollar cost averaging and more the end-to-end service. Then post that, we released a white paper on this called DCA Plus. We sort of challenged ourselves, and we had a PhD student, a good friend of mine, and he works with us as well at Calculated Finance, design essentially an algorithm where the whole goal was it's really great to minimize your risk, but you could miss out on potential gains. So we wanted to do is take that same favorable risk profile that dollar cost averaging offers, but outperform it. So essentially he put together quite a lot of research, spent many months on it, a lot of different testing, a lot of data, and essentially we wrote the white paper on it. And that essentially is a machine learning algorithm that assesses market risk at the time. And then based on market risk, it determines how much it should modify your buy or your sell coefficient. So it's always buying or selling something. Mm-hmm. And it has a max buy or sell as well. But that area it sort of modifies. And that's another offering that we released after traditional DCA where people can engage. And then speaking more with the community and continue to build out this ideology of smart swap tools, people said, okay, what if the price goes down? Can I manually decide how much I want to buy or sell, or the price goes up, etc.? So we introduced something called weighted scale in or out. Again, working very closely with the community members. So this actually came off the back of a Twitter conversation we had with a member. And this essentially, if you're more inclined from a math perspective, it's a linear transformation. So you can determine how aggressive or how light you want to be. If you add a 10x linear transformation, if the price moves, I don't know, let's say 10%, you might be buying 100% more of that asset or selling 100% more of the asset. So again, you have the same features out of the box. You can set, again, on-chain, price floors, price ceilings, automation, post-swap out of the box, etc. And then tying everything back together. We're very big on data, making data-driven decisions. So we track your average buy, your average sell price. We track essentially a graph over time, how much things have changed, the price, how much is remaining. You can top up your vault. And you can start to do really cool things where you can send the output of one vault into the input of another. So then you can start creating a lot more advanced strategies. So that's the bundle of where we are today and how we've gotten here. But we're very big on this ideology of, again, essentially enabling people to have these tools, which you would typically only find on a centralized exchange, but maintain the same self-custody in a non-KYC way, but be able to do that on chain. So have access to, again, your own funds, but have access to unique coins and, again, in a permissionless way. So it's quite important for us. I think we just ticked over, we've been on Osmosis for maybe 4 months now or 3.5 months. I think we just ticked over 1 million swaps performed there, and we're pretty close to the same on Kujira. So cool. Happy to see people using, happy to see that's happening, and what's next we can talk about after.
Let's get back to DCAing. Why do you think it doesn't make sense for most people maybe, or like where's the point in that?
Yeah, definitely. So I think that coming back to this idea, like essentially you've got a certain risk profile. So for people that are very risky, they might want to go all in. And traditionally that can actually perform better. If you buy the bottom, go all in on the bottom. It's the best investment strategy, right? Or sell at the top. Right? But I think notoriously, you know how difficult this can be, near impossible. If you can predict the future, I don't know if, well, you might still be doing this, but it'd be a unique situation to be in, right? So again, essentially what dollar cost averaging is you're spreading your bets out over time. So I think especially when you feel stressed or you feel like things are going to zero, we saw that the tweets going around, I'm out of crypto, I sold everything, never want to deal with this anymore. It's a bit of a meme, but a lot of people do feel that way, right? And it's hard to maintain that same conviction when you might not necessarily have that same crowd. So of course, like everything, it depends on what asset you buy. It's, you know, if you invest in a bad asset, it doesn't matter if you go all in on day one or spread that out over 100 days. If it's a poorly performing asset, it's not going to go anywhere. But this is coming back to our ethos, is that we're here to provide tools for people to make the decisions for themselves and just give them more tools in their own toolbox to make that call. And do you have numbers on what kind of strategies are used the most? Yes, we have some really unique insights into this, actually. So since we launched, market has basically been down only. Slight up period, but then very strong down period again. And I mean, just from a hypothesis perspective, we thought, a lot of people would be using it to buy. We actually found that there are some larger players that to exit positions, but not in a way where you market dump everything and there's a giant red candle, but slowly over time they can, either diversify their treasuries or they can pay for salaries and stable coins and what it might be. So it's very uniquely skewed to more smaller vaults are purchasing. Then there's less but larger vaults are using it to take profit on a particular asset, especially in illiquid markets. And then there's a happy medium of people kind of looping strategies back and forth and playing around with it. Like the last couple months, I played around with the weighted scale in, I think it's called, because I think mainly because I didn't understand the DCA plus, I think, or there was something going on with it, maybe not all the assets in there I wanted to buy. So how does the DCA plus work in comparison to, for example, to the weighted scale? Yeah, it's a great question. So given that essentially we assess market risk, there's a machine learning algorithm that does that, but to run something semi-accurate, you need a lot of data. So we get a lot of requests. Can you add Kuji to DCA plus? Can you add Osmo to DCA plus? Can you add Archway to DCA plus? And like for us, we're very focused on delivering high quality products. I mean, we could add that, but essentially because there's not enough data on these assets, they can not necessarily be correlated with the market and all the data sources we put in. So we limit it to large sort of blue chip, BTC, ETH, Atom, etc. DOT we support, and a few others. So for example, when wrap staked ETH comes to Neutron, it will also be supported. So that's kind of more of a strategy where you're not super clear. You kind of come in and define, you've got basically one option or a few options, choose what you want to buy, or what with, or what you want to sell into what. And then you choose how long you expect it to take. Obviously, the longer, the higher probability of chance to outperform traditional DCA. And we perform both of them together, so you can actually compare how much better you're off. And that's purely performance-based fees as well. And then the other one is like if you want to have more granular control, or you want to execute something maybe a little bit sooner or shorter, you can go and like have access to any of the assets. But again, it's up to you to kind of define like how aggressive your linear transformation is, or what your post-swap options are, or you have more access to more assets.
And what are those post-swap options usually used for? What is because I never tried that. What are people usually doing after they bought an asset or sold it?
Yeah, it's a good question. So one that I personally use myself is I use DCA Plus into BTC, wrap BTC. There's no real way of earning yield on wrap BTC. You could hold it in your wallet. But of course, we talk about capital efficiency. So one of the post-swap options that we offer on Osmosis is to have it automatically deposited using OfficeEd into Mars. And essentially, that earns still a modest yield of a few percent, but at least that few percent then I'm also capturing. So essentially, I set it up in the beginning. I set up maybe 4 months ago, I think, and I haven't actually gone on Mars to manually update anything. I haven't had to go and manually purchase BTC. BTC has been pretty down only, so I'm glad I didn't ape in the beginning. And that's a complete set and forget strategy. So for those people that are curious in crypto, or they might be having a tough time, or they need just some time away from Twitter because CT can be quite aggressive or depressing, depending on the market, or very hypey. You can come in, set and forget, and come back in, I don't know, a year, 6 months, a week, something like that, and know that it's all been taken care of.
And when it comes to buying assets, it always starts with stable coins, right? Or is there any other method for that? Like, can you start with wrap BTC, for example?
Yeah, I mean, from like a technical perspective, the contracts are identical on the buy or the sell side, right?
But it's not available right now, right?
It is available.
Oh,
yeah.
okay.
So we spoke to a few people, and the mental model early in the days was that if you're buying something, you're almost always moving from like a stable currency or asset into something that's volatile. If you're selling something, it's almost vice versa. And then we kind of spoke to a few people like, okay, what if you wanted to go wrap to BTC into wrap stake ETH or something like that? So people support that as a sell. So you can actually do that on the DCA out or weighted scale out or DCA plus out, depending on the asset there for that one.
And going back to the algorithm, what is it roughly doing? Because it's like, for me, it's hard to wrap my head around that. Is it like trying to predict when an asset drops and trying to sell in advance, or what is the DCA Plus doing roughly? Yeah,
definitely. So I think the core thing to take into play here is the fact that it's not a trading bot. It's not going to try to make you really rich. It's like if you have a thesis or a hypothesis that you want to acquire an asset over time, but don't know the best time to do that, this is where this comes in play. Right? So if you plan on like day trading, for example, DCA Plus is definitely not for you. Right? So essentially, again, at like a really high level perspective, what I talked about before, we bring in a lot of different data, and we've got API set up essentially that streams in information. The model's been trained on this information, and essentially it looks at all these different days and assesses, okay, what's the likelihood of a crash in the next X period? Right? So you can imagine, let's say you've got some like off-chain information or like inflation numbers or anything, and that obviously has some impact on crypto. You can see crypto can be quite correlated. So you might also bring in like volume. You might also bring in maybe implied volume or price or whatever it might be, how much activity is on chain. Use all this data essentially to inform what is the likelihood of a crash again in, let's say, 2 weeks, 3 weeks, 4 weeks, depending again on the strategy. And then based on that likelihood, if the crash is very high likelihood, you might not necessarily want to be buying a lot there. So you might hold off some funds. You still obviously buy because there's always at risk if things just start taking off and you're left with no exposure. Right? And this is what the lump sum comes in. You might be trying to wait for the bottom, and all of a sudden things just pump 100% in a day because the Bitcoin grayscale ETF or some ETF just gets approved. You can never predict this. So it's like get some access to that market. And again, it does that over time. It just modifies that buy or sell coefficient based on that information. If it's a very low risk of a crash, it will go in heavier. And if you have a strategy set up, you can actually track what the price is doing over time. And then we map out traditional DCA. Again, it's usually quite very linear. But with the DCA Plus, you might be buying more, buying a little bit less, buying more, etc. over time. And again, that just comes down to what the algorithm predicts the likelihood of a crash coming.
So the DCA Plus basically, it just buys, right? It never sells. That's what you said with it's not a bot, correct?
It does one of the two. So if you want to sell, it will only sell. If you want to buy, it will only buy.
Okay. And what's the process for people that don't know the whole decentralized way of using CALC? What's the process of setting something like this up?
Yeah, I think there's still very much typical barriers to entry that most crypto kind of faces, right? I think from a very basic level is this concept of a wallet, right? You hear all the time, it's pretty stock standard, you have to have a seed phrase. What's a seed phrase? Mm-hmm. If you lose this, you lose everything. I can't call anyone and get it back? No, it's gone forever. That's already very stressful, right? And I think there's some wallets taking the steps in the right direction. We have account abstraction coming soon, which is quite nice. This idea of what we talked about is like abstracting away this idea you have to pay gas fees. Like it's a new concept. You've got to pay every transaction. What does that mean? In this coin? Where do I get this? How do I get it? If I don't have anything, I can't make any gas. So I think at the moment, we're very realistic. It's definitely not in the ideal state. But yeah, you need to have a wallet. You need to get funds. You might want to on-ramp funds through Okada or through a centralized exchange, or local money, for example, is P2P. Or there's some equivalents out there that do something very similar. You could bridge it across. So we work quite closely with the Squid team. If you're not familiar with them, they're absolute legends of people and have a really great product. And I think they recently released their Cosmos swaps as well. So that helps you move assets back and forth. And even them, they'll airdrop you some native token for gas transactions, so you can actually do something where you get to a new chain. So you have to have a wallet. You need to have some funds. Then you need to understand you've got to click the connect wallet button, which again can rename to really log in or whatever it might be. I think that paradigm shift has to happen, but we've kind of almost conditioned a smaller user group in crypto where it's the crypto normal and the standard, and they just have an expectation. It's like you're getting in crypto, you need to learn. You got to go on Telegram. You need to open up a CT account. You have to learn about different wallets. You need a ledger, or you need to keep your seed phrase somewhere on paper. Never put it on wherever it might be. And then those things, quite large barriers, but once they do, and then maybe arguably the hardest, they need to know what asset they want to get access to. So typically that's done through friends and family. They'll say, you know about crypto, don't you? What should I buy? It's BTC? What's the other one? Is it like Ethereum or something? Right? And I think especially in the Cosmos, where a lot of the assets of course, we're trying to push new tech and try a lot of things that are different, but I think we've got something like 2% of the market is in the Cosmos ecosystem, and explaining that to people on why this particular asset might be a better bet than others can be quite difficult. So yeah, they're basically the requirements to kick off a strategy on CALC, which barrier to entry, I would classify that as high. Mm-hmm.
And do you have any plans to make that easier?
We definitely do. So I think that there's a famous saying, first-time founders think about product, second-time founders think about distribution channel, right? And I think that the way we like to think about this is that we are a service, a product service, etc. And how can we actually make that a whole lot easier to get access to? So I think thinking mobile first is quite important. So we both support the Kepler mobile app. You can access CALC. Obviously, it's not the most perfect native experience, but it works well enough. We're also looking to work with Kajura on their Sonar wallet application. We think they do a really great job with abstraction there, and seeing, can we get this integrated into different services? So it's sort of number one from a distribution channel. Number two, we've been thinking about, again, become a very lean startup. Iterate. If we do too big of a paradigm shift straight off the bat, you can end up with a Kepler 1 versus Kepler 2 feedback potentially from the community, right? Often people don't love change, but if you slowly nurture them through it, they'll be more comfortable with it, right? So even this idea of connect to a different chain and then all your assets aren't in this chain and you want to go there, right? We've been thinking what if we abstract that away? Mm-hmm. The whole Cosmos thesis is this idea of, interchain apps, right? Interchain everything, Internet of Blockchains. But, do you really need to know that all the blockchains are sovereign? Sure, it offers benefits of customizability and sovereignty, but, from a user experience perspective, how do you abstract that away? And I think that's kind of an interesting challenge that we're looking at the moment. Of course, we're currently on 2 chains. I think you'll see us on 4 chains before the end of the year. And, how do we play around with that from a user experience perspective? And then beyond this, we've been keeping our eye on account abstraction. And this ideology is okay, if you completely removed this idea of wallets, can they still get access to this service online like you would with a regular Web2 app?
And will there be other ways to, or easier ways to get my funds into CALC? Like, for example, do you plan to implement like on-ramps or even something more like native to normal people? Like, can I put in my credit card directly into CALC, to DCA? What are your plans there?
Yeah, I think that's fantastic. That's actually day one. This is something we're thinking about, and we've had. I can dig these designs up back in Figma because they're OG CALC stuff. And there's this idea that, you know, much like you have a drop down, you choose your stable coin. What if you just choose the USD or the AUD or the euro or the pound, right? And then we actually designed a full user experience around this where, you know, instead of like you click that and then you actually put in your details to on-ramp the capital and then you continue through the process as normal, right? And for us, you know, this kind of experience we're still striving for. Technically at the moment, it's quite difficult to support. Kato Money was who we're working with and they're still available. We have the widget on our drop down in the wallet. We also looked at the P2P transfers with local money. They spun up. They've kind of taken some time off. I believe they're coming back now. And I think we'll see things with like native USDT and native USDC coming now to Cosmos. Hopefully more providers will start supporting on-off ramps because some require KYC, some don't, some are very expensive. Some just don't support particular languages or regions from a credit card or a debit card or a bank card perspective. So I think what I'd love to see is we can get to a place where on and off ramps are equally as cheap on a centralized exchange versus, you know, on a decentralized exchange. Often a centralized exchange, they'll capture a lot of the funds through, you know, the spread that they offer. So you might buy, BTC might be priced at 20,000, but you might be buying it for 20,500. Obviously that's fudged numbers, but that's how they kind of hide and abstract that fee away. And I think like very difficult for us in the decentralized space is that one, you need to ensure things are economically viable, not just from an inflationary perspective, because realistically it just puts I won't call it a problem, but that puts the challenge off to a later date, making it much harder. And because you typically start with crazy valuations. You know, how do you might raise 5 mil at a, let's say, 70,000 mil valuation, right? I've worked in both corporate and startups for a long time, and typically you'd have some valuation around 8x your annual revenue, right? Of course, how much deterministic value can you generate? And then there's obviously the speculative factor on top of crypto. So I think like just from that perspective, it can be quite difficult. But if you get to a point where, you know, you've got to expose, you know, these are the real costs for running the service, and people are like, oh, I don't know, it's a bit expensive or it's seemingly expensive, even though they might be paying the same fees, just be unaware of it in a different way. But I'd love to see that on-off ramp become super cheap, super easy. I'd love to see, you know, access into crypto and out of crypto become seamless. I'd love to see people not even realizing that they're using crypto rails.
That would be awesome. And do you have any plans to that people are able to maybe publish their own like strategies on CALC or develop their own little things on top of it? Or what do you think will there be on the future? Yeah,
and we're I think much from a design thinking perspective, very human centered in terms of who we speak to and how we use that to make decisions, right? I think we hear a lot of feedback. One, a lot of interest is in this idea of feeding in different data sources to make decisions on your trades, but still giving people the optionality to choose. So very simple and often requested one is, can we use weighted scale in and out, but can the base price be the 20-day simple moving average, right? Or can we swap between in Bollinger Bands, for example? And I think that that's a space we've been exploring quite a lot. How can we take this off-chain data and enable you to essentially create your own calculate and start smart swap strategies off the back of that? So I think that's kind of an exciting space where, again, we give people the tools to make their own decisions. It's not the sense that it's a vault you just deposit your money in and, you know, we're responsible for, you know, making sure it's profitable or not profitable. So I think like that's one area we're exploring. We're also exploring this idea that beyond just the buying and the selling, you obviously add this time element to it. There's other ways to go about things. So we've been building out our more pro strategies. It might be around mean reversion, might be around pair trading. Obviously we know there's a big push to get BTC into the ecosystem in Cosmos. We've got Nomic, we've got Babylon, we've got BitGo, bring native wrap BTC, and you've got a lot of liquidity coming from other providers. So I think that's obviously a bet the Cosmos is taking. They can get a bit closer to the Bitcoin community and leverage that power, because I think a lot of them started from those roots. Can we think about that? We obviously have on Neutron, we've got Rapstack ETH coming through the Lido partnership with Neutron. So we should see more liquidity there and supporting essentially these more traded assets in different ways, right? So I guess holistically speaking, the way we think about this space is that the centralized exchanges, they kind of have a proven model for this, where, from like a customer retention perspective, is you kind of want to keep everyone in that same sort of ecosystem. The longer you can attain the customer from attention, from a lifespan perspective, the more revenue. The way they think about it is extract revenue over time. They're running the business. But then, can you have these auxiliary services on top of a swap? So you go into Binance and you've got trading bots, you've got leverage, you've got different perps, you've got, you name it. It's like a launch pad. It might be. And it's like tying all these things. The one real benefit that they have is it's a nice user experience. Like you get on Binance, it's like you don't go to one thing and be like, okay, completely new branded thing with different fees and I have to understand how this works. And I go to this other thing, it's a bit different, right? The power of decentralization is that you've got interoperability, you've got composability, you've got a lot of people contributing to the same system. But, the fault of that is it can be quite fragmented, a very different experience there. So again, like my sort of thesis on the end is that most DEXs will mirror what centralized exchanges offer to some degree, but do it in more of a native experience way from these different products. And hopefully they come to some sort of conclusion where, you might want to see some of the CALC functions or features natively into Osmosis. So you just go on Osmosis and, you might be using CALC in the background. It's still decentralized. It's multiple contributors to the same code base. But, from the user experience perspective, it's like someone you interact with them is a lot nicer to use. I think these steps, if we continue to take them, we can bring a lot more people on chain, make it a lot less scary, make it a lot more friendly.
And what do you think is, if you look at the long-term vision of maybe crypto in general, but also like CALC, what would be possible long-term when platforms go beyond this copying of centralized exchanges method? What do you think could be possible if you really like embrace the interoperability of all the crypto stuff together with what CALC does?
Yeah. And I think it's a fantastic question. I did speak to one of the strengths of it being decentralized, right? And you hit the nail on the head, right? There's this idea of composability and sticking things together. Originally, like in the crypto space, hyper competitive. Everyone can hit copy pasta. It's the same for a reason, right? They can fork user bases, etc. But what's hard to do is like duplicate a brand, duplicate a community. But I think that because of this, it kind of really forces innovation to occur at a speed that you would never find in a traditional finance system or most traditional systems, right? I worked in many different industries before, but the fact that you have such intense competition kind of always pushing the boundaries to create new products, new things. And I think because the switching cost is so low, that really gets to a point where instead of previously in like a Web2 company, you might have maybe a German example, Aldi and Lidl, right? They're competing against each other, where they would never be like, okay, we've just introduced a partnership where you can buy your water from here and you can buy your eggs from here and, it's super easy. Where in the crypto space, it's like that you can do, right? You can have two competing products and then all of a sudden someone can build something and now they're used together. And then you can create wild and imaginary things off the back of that. I think the other thing, and I was speaking about this before, one of my favorite things about the crypto space is this idea that you, again, abstract this idea of like race, religion, country, degree of education level, right? It's like if someone has internet access and they have desire, they can participate this as a wallet address. And so naturally you remove a lot of these biases. So then you can start running very exciting social experiments, right? Where, you might have no idea that you might live in a country that has a war against someone else, but you might be working every day with someone from that country knowing that they're not from there. And I think because of that, you can like mix a lot of these ideologies and this knowledge together to kind of push the boundaries on the way we think about things and do things differently. And for me, at least, it's like one of the most exciting things, right? I mean, even at CALC or the community, I have no idea how many different countries and places people are from, how young or how old or what religions it might be. I think it's like everyone's kind of working towards this common idea of we can do things a bit different. Let's try all this, No one's saying, oh, it's impossible to do or we don't want to do it that way. I think for me, like just letting that magic kind of ride, that will introduce what the future looks like. However, saying that, I would like to see maybe less quick money kind of projects that may be coming through. I think a lot of that noise has died out now. And you look around the space, it's like not that many builders, but easy come, easy go, right? You can see the people putting in the hard work today and during this market, of course, the hope that will pay dividends in the future. But these are also the people that are here for more than just, to make some money.
And based on that, what are your plans for the future of CALC?
Yeah. So again, future of CALC will continue to build out these products. Again, we'll be very happy if, we have essentially enabled a whole new generation of crypto to come through, especially if they might be new, if they're educated from experienced people to sort of set up these more calculated strategies, not necessarily get caught in a lot of the hype that can very much come and the mania that can come, right? So I think one, that's still our mission. We still love to see that. What the distribution channel looks like, it might be more native into different DEXs. It might be supporting more cross-chain applications. It might be even supporting, we talk about this idea of like Internet of Blockchains and Cosmos, right? That doesn't necessarily limit itself purely to Cosmos SDK blockchains, right? How can we support assets in different chains in the EVM space and spaces beyond that, right? I think like that sort of vertical scaling that we're working on at the moment is sort of our main focus. But then once we're happy and we talk about this idea of product market fit in 3 different lenses, is it desirable? Do people love it? Is it technically feasible to build? And is that viable from a business perspective? Is it generating at least enough to stand on its own, be sustainable as a service? And if those boxes are ticked, then that's when we scale horizontally quite rapidly and essentially support as many people as possible. We don't want to, again, we don't want to limit it to only the people in the Cosmos ecosystem because they're in the Cosmos ecosystem, or a particular chain because that's their chain of choice, right? We want to have these tools available and accessible to everyone.
And there are a lot of people out there that don't even know what DCA means. Do you have any plans to reach those people too by educating them or, doing stuff like this? What do you think would go down there?
Yeah, I think it's a great question, right? We early in the days we introduced a tweet series called Calculated Thinking, right? And then we'd cover topics like availability bias, or we cover topics like herd mentality or loss aversion, right? So I think for us, education is quite important. I think if you look at it from like a sales perspective, you have this sales funnel where on one end you have people that are problem unaware, right? They have no idea about that they might even have a problem. And then you get to people that are problem aware. They're like, okay, I have a problem. Then you might get to people that are problem aware and solution aware. They're like, okay, I know I need to solve it in some way. And then you get to a place where, basically you're ready to close a deal because they realize that they have a need. And I think that from like a startup perspective, while a lot of people talk about onboarding the next, I don't know, what's the typical saying, 10 million? Mm-hmm. I'm pretty sure I hear that everywhere. Maybe 1 million, 10 million, 100 million, I'm not sure. I think that the realistic truth on this one is that it's significantly easier, and I think this is a function of why DeFi is from like if you look at a systems design perspective, is why a lot of DeFi caters for quite degen things, because the degens are hanging around and naturally products are built for them because that's where either the money is, the revenue is, and that's kind of creates this virtuous or viciously, depending on which way you don't look at it. And it's very hard to essentially break that and then start servicing people outside of the crypto space, and one have to educate them on like what is crypto, etc. There are products that are trying to do that, but they're definitely not trying to do that on chain, or if they are, not well so far. And I think that this will probably come in 2 ways. One, we need to have a lot of the technology available to do that. So we talk about the account abstraction, etc. It's like the ability to abstract away a lot of these intricate details. I'd love to come back and, we're sitting down for a coffee in 10 years and be like, hey, remember we used to pay gas? Remember when we have to, use a different wallet on a different chain or change chains? Do you remember that? Or even like, just thinking about, you've got needs, you've got problems, you've got functional needs, emotional needs, social needs. It's like, you solve them and not even realize it might be on blockchain. So I think to summarize, it's a daunting task at the moment. If you kind of build on-chain products for people that are not on-chain at the moment, and then try to bring them on, be very difficult. And I think you need a lot of capital to successfully do that. I think that a lot of the tech is kind of pushing in the right way to support these functions. But again, if you can solve a need, if you can solve a problem, I think that if the best option is to do that with blockchain, then that's a natural thing to kind of flow into. Right? I'd argue that DeFi does have product market fit, but there are some areas that don't necessarily have product market fit that people are kind of trying to shoehorn into blockchain.
What can we expect from you guys over the next couple of months, 12 months? What's going to happen?
Yeah, so I think for us, very interesting in continuing to build and iterate on this idea of interchain apps. Again, as I mentioned previously, it's like, how can we abstract away this idea of changing chain? Wouldn't it be great if it just you have something, you've got an intent, you want to get something and you want to exchange that for something else, but in a different way. How can we fulfill that with removing a lot of that? So I think that focusing on that area is big for us. The second part is, again, expanding to different Cosmos chains. I think that Neutron's very enticing in a number of ways because they're kind of thinking about this interchain app idea. And then Archway as well, where they've introduced this different economic model where, potentially you can use it to run either cheaper platforms because they've got the gas-free rebates or something in between. And coming back to us, we like to challenge ourselves like from first principles perspective. Do we earn value? Do we earn the right to charge for that value? And I think if that can be done in a slightly different economic way, potentially Archway can be quite interesting. So they're kind of two areas we're looking at. We'll continue to build out this suite of products and tools and the pro space that I spoke about before. And yeah, there's what I talked about before. We have a lot of larger treasuries or, what it might be, uses CALC to either diversify or take profit or even pay grant. So I think we've been looking at that more B2B type angle, and I think there'll be a product that comes off the back of that, essentially to cater to those parties as well.
Awesome. Yeah. Thanks for updating us here, for especially answering my questions. And I'm happy to welcome you back here once we see something new. Thank you.
Fantastic. Dankeschön. Thank you very much for your time and the lovely setup here. You guys are doing really great work in the Cosmos, and I think design first is something that's very needed. So I appreciate you guys to be here and looking forward to seeing you in Cosmoverse.
Thanks.